everyone. My name is Mujtaba. I lead India investing for GSV. Today we have Rahul, a partner at Lightspeed, Amit, the CFO of PhysicsWallah, Karthik, who heads Bloom Ventures, and Varun, who heads the technology practice at Avendus for I think all of Southeast Asia, not just India. We're going to start by kicking the ball to Varun. Today we're talking about the Indian market, about EdTech specifically. Varun, you sit between the companies and the investors who we have on the panel. What are you hearing? What are they telling you? How are you gauging the temperature in the market today?
Thank you, Mujtaba. Good morning, everyone. Good to meet you all. Mujtaba, thanks for giving this opportunity. Right. So maybe, starting off with the topic for today, which is essentially, is the gold rush coming back to EdTech? Right. I would think so. Are we in a bull run yet? Definitely not so. But I think we are getting back. So maybe I'll start off with a few numbers. 2020 to 2022, we saw almost $2.5 billion or deal activity on an annual basis. 2023, it fell down to a paltry $200 million. But the good news is, if you see last 6 months, we've actually seen deal activity of 600 million plus. 2 deals which are in 150 to 250 million range, right? And a couple of them which are more than $50 million. So deal activity seems to be coming back, right? And what is changing, right? So if you see last couple of years, there has been a squeeze of capital available for EdTech entrepreneurs. So what EdTech companies have been focused on is to turn around the businesses, focus on execution. So again, throwing some metrics, 5 companies which are in $100 to $500 million top line range, right? 4 of them are actually profitable. There are 30 companies which are north of $25 million in top line, and majority of them are profitable. So and it's not been easy. EdTech in different segments have faced headwinds of different kinds. And if you pick each segment, whether it's return of COVID, if you see something like study abroad, all the news globally around people looking at their immigration policies. So every segment in EdTech has seen headwinds, but companies have executed well. Having said that, there is still some challenges. If you see the broader tech space, right, you will find traditional companies which are listed and doing well. EdTech or education still doesn't have an outright public market success. Just taking Zepto as an example, you will find DMart, for example, is a $40-50 billion listed company. So it's much easier for an investor to underwrite a Zepto story. But in education, there are a handful of listed traditional education companies. The largest one is probably around 350-360 million in market cap with an EBITDA of $33 million. So hopefully some of this will change. We do see at least 4 or 5 very solid assets in the new generation EdTech companies which will list in next 2-3 years. There is one which is going to file soon, and no prizes for guessing that one, right? But apart from the fact that there are no listed education companies in India, even globally, most EdTech companies which have listed, their comps are not helping. So therefore, we need our local heroes, and hopefully these 5-6 companies will plug some of that. And just one last point, I think historically we've seen that even on the traditional side, there's not been much action. Investors have generally been a bit more cautious when they are looking at regulated assets. So hopefully some of that is changing now. Last couple of years, we've seen a couple of school chains got a lot of interest. People are getting more comfortable investing in regulated businesses. So hopefully, some IPOs there, or at least some meaningful private equity action will again propel deal activity for the space. So we remain bullish. And maybe to just summarize this point, listings in new generation companies and some action on the traditional ones will propel deal activity overall for the space.
Thank you, Varun. So, Rahul, one of the big transactions that Varun mentioned in the last 12 months, of course, was the growth round that you all co-led in PhysicsWallah's Series B. Of course, Lightspeed has had a mixed experience investing in the sector. How did you, get comfortable in this environment, making a big swing?
Thank you. I think fair and a nice way to call it a mixed experience, as a lot of us have had. But look, I think there are 2 things that are sort of constantly playing at the back of our heads. The first thing is that, is this a space where we want to be invested in because of the natural attractiveness of the sector in terms of size, growth, potential profitability, right? And the ability to create a new venture which leverages technology to grow in the space, right? And the second most important thing is, I think you want to be in business with the right kind of founders and the right kind of teams. That's my very suitably generic, polite answer to that. But frankly, look, we are in the business of taking risks. And I think you can underwrite a risk when you understand the quality of the asset really well. In this specific case, I think, we spent a lot of time, Amit and I were chatting a little earlier. I told him, the first time we started doing diligence, one of my colleagues, Shreyam, is here. It's probably about a year back. We took a few months of diligence to understand the asset really well and understand that there is truly a significant amount of difference in how they are approaching the consumer. They are approaching a different segment of a consumer with a proposition that lends itself to low-cost acquisition, and then despite that, the quality of education and the outcome is so high that the retention is super high. Once you go through the process, you build enough confidence, and then that is when you end up making the leap. And so far, the only surprises we have had are positive surprises, and hopefully good things to follow.
Karthik, your phone is ringing, so I'm going to come for you. You've been investing in the sector a long time. Unacademy, Class Plus, Leverage, more recently Interview, Kickstart. What are you seeing? What are you seeing in the fundamentals, right? You're also in different categories, not just test prep, not just traditional education.
See, I think the lesson for the new age folks, like pointed out from the depth of like Avindus learning, is that education shouldn't be a sector where you're losing a lot of money, right? It's a relatively sort of predictable way that the revenue flow and the value drivers of the business are. And I think EdTech went overboard in trying to say we will take over a new model of execution within subsectors. And for that, by throwing money, you can go and acquire customers. But it's also it's not an easy business where you acquire customers per se, because the LTVs are relatively short, right? And so I think there were a lot of fallacies in the way the broader EdTech market attacked the ecosystem, and then got COVID tailwinds and thought that was sustainable and permanent behavior change, and it wasn't, right? So I think the shocks basically tempered the business models and the underlying companies a lot. So when we came out of that COVID shock, I think the folks who had not set up, in the right fashion, like let's say a physics wala or eruditus, or the folks who are all planning to go public and who are getting to profitability, everyone else had to ratchet their business models very rapidly. And one can argue that most of them have not yet reached that point where they can justify those old valuations. Far from, and therefore they have to get to a market reality and correction on what their value is in some sense. The other thing is, I don't know whether anyone's seeing enough depth in a singular line of revenue streams to be able to build a very large business. I mean, the last panel said, can you build $1 billion business? That's not easy in India. It's fragmented on many counts, and to capture value across the same customer, you have to offer different products across different parts of the life cycle of that customer, right? And so what we are noticing amongst our portfolio is that you can't be content with trying to be a one-trick pony. You got to service the customer over a 4 or 5 year period and basically move wherever the customer is moving. And then you become a multi-product company, and theoretically you should make money on almost all the products. You can have maybe one loss leader, but you can't have 4 loss leaders. So it forces us to think, is there enough room for us to play, and can we see more billion-dollar companies? We've been very tentative, to be honest. The only things we saw ourselves play in Fund 4 were all related to training and skilling, right? Fundamentally, job creation is not going to go anywhere as a problem in India. It's a massive scale problem in the long term. So even if you see leverages streams or class plus streams, they're moving in that direction, right? And if you looked at Interview Kickstart or Virohan, they fundamentally focused on, can you create employment? Because that's what 90% or 95% of all education in this country is leading to. It's not for the sake of getting a PhD, it's getting a job, right? And so if you can sit in the job value chain and you can monetize that better, I think there's there are interesting opportunities. At least that's our take. That's what we've been focused on. We haven't done too much. We keep looking at a whole bunch, but I'd be lying if I said I got excited by anything else in the last 3 years.
Amit, are you going to leave room for anyone else to do anything?
So, thank you, Mustafa. I think two things before I answer that question. I think for first thing for us, I think we keep on saying the term EdTech. I think we've consciously stopped calling ourselves EdTech now. The idea is we look ourselves as an education company which is trying to solve the entire life cycle of a learner or a student. So I think that's the first thing. We at least want to make that fundamental change within PW, within our leaders, and also from what the narrative that we want to build. Secondly, in terms of back to what you said, I think obviously the landscape of education is changing. There is enough capital now coming in. There are companies who've now consciously thinking of building corporate governance in terms of the way forward. And what we feel is that's an event. It's an event like I think I heard somebody say earlier as well, is it's an event in terms of building a company consciously for the next 5, 10, 50 years. I think if you keep on taking those decisions rightfully, have the leadership team consciously thinking of being conscience keepers for the capital that you're raising, I think that is probably going to lead us to the right approach, rather than saying I just want to do this because I want to do this for the sake of doing, actually. So
Varun, you help companies raise money, you just helped Leap close their round. What is your assessment of the state of governance, right? Going back to the big catastrophe in the past few years, it's really about governance more than anything else. Clean reporting, processes. Are these companies ready to go public? Is the data there? Are the processes there?
So maybe I'll just break your question into two parts, right? First part being state of governance. I think by and large, the state of governance is good. I would say, and especially after the debacle of the first one, there's been investors have also done a great job of focusing a lot on the corporate governance aspects of the companies they are investors in. They've been, apart from just the regular governance that you see, people have started internal audits, which are third-party internal audits, especially for larger assets. So I think that has been changing a lot, generally in the tech space. So therefore, I would say a lot of positive progress there. Coming specifically more from an IPO standpoint, I think the standards there are much higher, right? Because it's not just about ensuring that everything is tracked properly. It's also about ensuring that you are able to go to the market, you are able to give predictions of what your revenue and profitability will look like for next 12 to 24 months. Public market investors are always expecting companies to share guidance, and then they very closely track the actual performance vis-a-vis that guidance. So therefore, if you're actually sort of looking to go public, then the standards are much higher. And in the last couple of years, we've seen a lot of companies across the tech space which are now ready to go public. In most cases, you see the preparation starts much earlier, right? At least 1.5 years before they even start hiring bankers or start speaking to bankers, in terms of ensuring that you have someone who's got experience in running a listed company who comes in as a CFO, heads the entire finance function, and then ensuring that the entire corporate function, board, etc. is all taken care of.
Karthik, you've talked about and written about the SME IPO. In your portfolio, of course, there's a variety of levels of scale of these companies, tying into the conversation with Lighthouse earlier. How do you think about main board IPO, SME IPO? How does that tie into governance?
See, I think SME was a phase in time for us, at least. Our first fund was like a 100 crore fund. If you got a 50 crore outcome, it was a fantastic outcome. It doesn't matter when you're a large fund. So for Lightspeed Growth or for Bloom, it doesn't matter anymore. It's a $250 million fund. Each outcome has to be in tens of millions of dollars, if not hundreds of millions of dollars. And so I don't think the emphasis should be as much on the SMB IPO as much as 2-3 factors that somebody thinks about when you're going public. So first, to lean in on what Varun said, what he said is true, not just of EdTech, it's across the board. Second is, fundamentally, in the private space, we've never seen this kind of quantum be given to relatively speaking, first-time founders in the history of India, right? So somebody thought that's perfectly fine to do without actually putting the guardrails, which is what created, the issues. The need to go public and tying those two together, I think in India it's just not a bad discipline unless you claim that it's not going to be founder-led just because it goes public. If you theoretically say you can build that in private for another 5-7 years, you can do as well in the public domain, is my logical take on it. This artificial barrier that because you go public, you'll build badly, or you're worried about quarterly projections, I think it's a little bit of a fake syndrome. That said, if you don't have predictability on a 3-month basis, 6-month basis, you shouldn't go public, right? And therefore, our take has always been, not every business can grow to either $1 billion valuation or $100+ million of revenue, or needs to before being able to get profitable or sustainably predictable over a year. I think for me, that is the magic moment on which we advise people to go public. So in the next year, we would hope to, not in EdTech sadly, but maybe Class Plus will go public amongst our EdTech companies first. But amongst the others, we hope that we'll have a $250-300 million valuation IPO. We'll have one at 750, we'll have one at 1.2 billion, and we'll have one at 1.8 billion. So it doesn't matter what the size is, in my humble opinion. I mean, as legendary numbers go, Amazon IPO'd at $300+ million. Apple, sub $1 billion, right? So compounding, and all of us know the secret of legendary companies is 90, if not 99% of value is created after they go public. So the VCs look like fools because they've actually sold around that point of time, whereas most of it has been captured by public market investors. So I'm a huge believer in that phenomena. And I think if we can show that level of predictability or profitability, it's just a question of whether you want to classify yourself as a small cap, mid cap, or large cap, but you should go public and continue building there. I think that's the future in India. It takes care of governance because the guardrails there are with the regulator. I mean, there's a lot more fear that you can actually go to jail. I don't think there is as much in private companies. I'll be blunt.
Rahul, how do you think about this from a global perspective, right? I think you guys invested in PhysicsWallah out of a global fund. You're looking at U.S. and India opportunities. The private and public markets are very different in both places. How do you all think about the opportunity set?
I think the first thing is, I think there is no larger market for education if you look at sheer volume because of the population or the demographic dividend, whatever you may call it. But increasingly, one of the things that we've also realized, having invested in the space across both the world and in India is, I think the world in education can be clearly divided in two poles. At one end, there are folks like PhysicsWallah, where you jokingly said, is there something they will not do? Absolute mega platforms who leverage the power of their brand in tapping into multiple verticals. But interestingly, I think a lot of innovation also starts to happen in small niches. Those are insertion points which great founders use, and I think from that is where they start to grow. Now, if you look at the leverage journey from a while back, the company 5 years ago and today looks very, very different, right? I've got a couple of friends here building a company called Tinker Village. They're building something that's, building the love of learning for science or math amongst young students. And, these are, to begin with, narrow insertion points, but you realize when you see companies like this across the world, this narrow insertion point is from where the innovation happens, the customer love starts to build, and then over a period of time, then you can aspire to become a mega platform like a PhysicsWallah, right? So I think the interesting thing is that there is no lack of demand for learning around the world. Both students and parents around the world are increasingly spending a lot more on education and learning. And I think ultimately it comes down to the quality of the idea, the quality of the founder, and most importantly, the quality of the execution. If I think all of these three things are in place, I think there is no lack of capital flowing into the sector, irrespective of what somebody previously was describing as accidents that may happen.
Amit, Karthik was talking about how nothing should really change when you go public. obviously Physics Walla is doing many, many different things in many different business lines. Can you still do that to the same degree and experiment to the same degree and innovate to the same degree while managing extreme predictability and quarterly guidance?
So I think for us also, in terms of our core business is test prep, So I think it's sometimes it looks like, we're actually doing too much. Is the heart of the nucleus of the business is how do you reach out to as many students who are wanting to go test prep. That's one large vertical that we, a big prominent part of our business. If you look at the odds, India is a high stakes game when it comes down to this. The genesis of test prep is largely probably one out of 1,100 kids actually go and end up into a nice, AIMS or a good medical college. 1 in 100 actually end up getting into IIT. So I think the focus is how do you go into the life cycle of that student or learner and bring as much value as you do. So I think the idea is you go early, create that large community effect, and then make sure you start making impact on that. So obviously there will be adjacencies that you keep on building around that. Like skills business. How do you enable people who do not end up into a good engineering calling or a good medical college? How do you enable them to actually go and build a skill around what they've done? So the idea is, I think, from like what you said is experiments. I think it is. We are a pretty scaled up company. From a responsibility perspective, we have those 3, 4, 5 huge growth vectors that we are working on. And I think the idea will be to just put your head down and keep on plugging at those growth vectors rather than doing too many things at place, actually. So.
Varun, do the investors that you're talking to when you're helping businesses raise, do they understand that, or how do they weigh sort of focus versus the excitement or of the innovation? Does the platform message stick with them?
Sorry, can you repeat your question?
Basically, does Amit's message, which I believe in, which I understand, is it's about the brand owning the entire student life cycle journey. It's not a distraction to also do skills, because you're taking that same student who is not going to end up in IIT, not going to end up at that medical college, and try to help them get a job. Does that resonate with investors, or does that feel like a way to gloss over the fact that you're building 7 different businesses?
See, I think my view is, I think if you actually just look back at the previous panel, right, Imran, who was part of that panel, actually made some interesting points. You need to have focus on not raising more than the desired capital, unit economics, and the last one actually is the most important element, which is learning outcomes. Okay, and given that I've done EdTech for last 8 to 9 years, people generally think that people are just looking at numbers and investing, and in some crazy markets, I wouldn't say that it's always the case. Maybe some people would have at times done some FOMO-driven deals, but there is a sharp focus on ensuring that the learning outcomes are coming out. Okay, and it's not easy to build learning outcomes if you're looking at the entire life cycle. So if there are companies which are able to prove learning outcomes across the learner's life cycle, I'm sure investors will be interested in investing in those assets. It increases LTV, so all positives, but just the proof points of companies showing learning outcomes across different stages, as there have not been many examples in India and globally.
Karthik, earlier you mentioned also on this point of outcomes, and your more recent investment interview, Kickstart, Verohan, being much more jobs focused. That, from our experience, lends itself to a more high-touch model, more services. How do you feel about, going back to what Amit is saying, EdTech versus education? Are they separate things? How much do they overlap? How does that influence your strategy and your deployment of what is a venture portfolio?
I think the tech for us in any sort of service delivery business historically has also been how does it help scale faster? I don't think it can independently drive outcomes for more than 10% of the population in general, is our take. This self-learning is very challenging at any age, if you ask me. It's not trivial at all. it's an enabler outside of the classroom, but it can't replace the classroom, has been our take. So broadly, the tech that can actually accelerate is usually around scaling either the way the service delivery happens, which is what the COVID phenomena showed, or if you look at guys like Virohan, etc., their classrooms actually run with a facilitator, but with a expert video running at the back. Here, I think there is a huge opportunity for, I know you've had many panels around AI in this conference, but fundamentally, we're hoping to see a seismic shift in the way personalized learning or personalized interventions can be enabled outside of a classroom, which we don't see at scale, at least being, monetizing at scale, to be very honest. Everybody talks about personalization, but we haven't seen that at scale. So that, I think, those elements are tech, building the rails at the back and enabling education players as tech. But, you and I know that in every field, whether it's agri or whether it's ed or whether it's space, we use tech liberally, but the model doesn't necessarily lend itself to being entirely technology-led. The sales model or the delivery model could be conventional offline, services, and then you're essentially slapping on the tech just to look cool. But broadly, tech is only, as I said, enabler of either margin structure or scaling faster, right? And I think that's going to continue for the most part, in anything around education and skilling. I wish, just machines could teach kids and job seekers entirely. I don't think that day is anywhere close.
Rahul, you're a growth investor. How does that factor into how you price companies, how you look at valuations, the level of services, the level of technology? How does that impact the margins? And, of course, you need to take big swings and be in the risk business.
First, I think depending on who describes us, we can be described as comprehensive or schizophrenic because we do both early and growth investing. But jokes aside, I would say like when you're looking at something which is much larger scale and you're looking to come into the company at a later stage of evolution with a much larger check size, I think truly at the end of the day, I think the number one thing that matters in any business, but even more so here, is customer love, i.e. student love. And why is that important? Because I think for the longest time, we've seen multiple businesses where, the easiest thing to do is to go on an acquisition rampage and pile on consumers or students. But if the quality of learning and therefore the quality of outcome that is being delivered is not great, retention sucks, and then, the LTV, the supposed LTV that's supposed to happen does not ever come into play, right? So I think the number one thing is about customer love, and I think that comes back to the core of delivering great learning and learning outcomes. As long as that is happening, I think everything else is factored around that. Once that is in place, then you'll say, okay, are the economics stacking up? In how much time is your CAC payback happening? What kind of referrals are happening? A lot of things you can add, keep on adding, but at the heart of it is that really that one true piece. And yeah, sure, is technology important in delivering that? Yes, in certain parts. But, should a business be beholden to, hey, if you're not, make up a number, 50, 60% of your business is not built with technology, we will not be investing in that business. No, I don't think we as investors look at it like that. I think quality of the business matters, leverage in the business matters. The leverage comes from technology. Now, is it across the board? Is it in certain places? I think that's a little bit case by case, but yeah, frankly, learning outcomes. Sound like a broken record now.
We're almost out of time. Amit, I'll ask you the last question, which is building on this thread. Do you see PhysicsWallah as a education company, a tech company, or building on consumer love, like a consumer brand? And I mean, at least in the Indian public market, that looks like actually the most rewarded, most highly valued premium is for being a brand.
So I think from whatever we do, the heart of everything we do is the community. If you look at the brand love that we get across all our, platforms, our channels, YouTube app, anything that we do, it's just the the heart of everything is that large community that we have built. You know, we're looking at almost like 100 million subscriber users across all our channels. You know, I think that love is largely because of what, you know, Alak has done to the brand in terms of building that, you know, the North Star of providing, you know, democratizing that education for everybody who did not even have access to education, you know. Secondly, in terms of education versus EdTech, you know, I think end of the day, everything that we do, you know, there's a huge layer of technology that we do, whether we do online, offline, you know. The big difference between EdTech and education is it takes away that essence of, you know, of what you're trying to solve. What we're trying to solve is outcomes for that student learner sitting in, you know, the most remotest of locations who would have never had a chance to get access to education. You know, I mean, I think did technology enable it? Obviously, you know, technology is the heart vibe, how we reach to that particular student, you know. But the concept of EdTech takes away the essence of the student, of the outcomes, and whatever we do around enabling or leveraging technology to do that. And that was the reason I made the comment that, you know, I think we want to look at the life cycle of education rather than just saying leveraging technology to solve it, you know. It's academics, it's pedagogy of teachers, it's content that you build, free content that you build, enabling those students to get to where they want to be, you know. And that is what the heart of we do rather than misconstrued as, you know, just an EdTech platform.
Thank you, everyone.
Thanks.